Hello, and welcome back to Boni's Life, your home for the most in-depth and insightful analysis of the crypto markets. As we continue our 2025 Year in Review series, we now turn our attention to a month that was defined by a fascinating and telling divergence, June. While the world was rocked by geopolitical tremors, the crypto market, in its own unique way, began to show signs of a maturing landscape. In this episode, we will dissect the events of June 2025, exploring the forces that shaped the market, the assets that moved, and the projections we made right here on this channel. We will also do our signature $100 investment challenge to see how you would have fared if you had followed our insights. So, grab your notebooks and let's dive deep into the intricate world of crypto in June 2025. June 2025 will be remembered as a month of contrasts. On one hand, we witnessed the raw power of geopolitical events to shake the markets to their core. On the other, we saw the steady, almost silent hand of institutional adoption continue to guide the long-term trajectory of the space. It was a month that separated the signal from the noise, the tourists from the true believers. And for those who were paying close attention, it was a month that offered a glimpse into the future of this revolutionary asset class. The month kicked off with a sense of cautious optimism. Bitcoin was consolidating its gains from the previous months, and the broader market was showing signs of life. However, this relative calm was shattered on June 13th, when Israel launched a series of airstrikes against Iran. This event sent a ripple of uncertainty across global markets, and crypto was no exception. The initial reaction was a flight to safety, with Bitcoin seeing a brief dip as investors de-risked their portfolios. However, the real fireworks began on June 21st, when the United States, under the direction of President Donald Trump, announced its own airstrikes on Iran's key nuclear facilities. This was a major escalation, and the crypto markets reacted accordingly. The news of the US airstrikes sent a shockwave through the crypto world. In the 24 hours that followed, we saw a massive liquidation event, with over $595 million in long positions being wiped out. Over 172,000 traders were liquidated, with total losses reaching a staggering $681.8 million. This was a brutal reminder of the inherent volatility of the crypto markets and the speed at which fortunes can be made and lost. The majority of these liquidations, a whopping 87%, were from bullish traders who were caught off guard by the sudden turn of events. Ether traders were hit the hardest, with $282 million in liquidations, followed by Bitcoin traders at $151 million. The pain was felt across the board, with major altcoins like Sol, XRP, and Doge also seeing significant losses. This liquidation cascade was a classic example of how fear and panic can spread like wildfire in the crypto markets. As prices began to fall, leveraged traders were forced to sell their positions, which in turn put further downward pressure on prices, creating a vicious cycle. The exchanges of Bybit and Binance were at the epicenter of this storm, accounting for 2/3 of all liquidations. This event served as a stark lesson for those who were over-leveraged and a reminder of the importance of risk management in this volatile space. In the immediate aftermath of the airstrikes, Bitcoin's price plunged below the psychologically important $100,000 level, briefly touching a low of around $98,000. However, what was truly remarkable was the speed of the recovery. By the end of the month, Bitcoin had not only recovered its losses but had actually finished the month up 3%. This resilience, in the face of such a significant geopolitical shock, was a testament to the growing strength and maturity of the Bitcoin market. It demonstrated that while short-term price movements can be influenced by external events, the long-term fundamentals of the network remain strong. While Bitcoin showed its strength, the altcoin market painted a very different picture. The divergence between Bitcoin and the rest of the crypto market, which had been a recurring theme throughout 2025, became even more pronounced in June. The Market Vector Smart Contract Leaders Index, a key benchmark for the altcoin market, fell by 5% in June, highlighting the continued underperformance of this sector. The DeFi index, however, showed a surprising gain of 4.19%, suggesting that there were pockets of strength within the altcoin market. The memcoin index, on the other hand, was a sea of red, with a decline of over 17%, a clear sign that the speculative frenzy that had characterized the early part of the year was beginning to fade. The tail of the tape for individual altcoins was a mixed bag. Arbitrum's ARB token was a standout performer, with a gain of 6% for the month. This was largely driven by the news that Robinhood would be listing up to 200 tokenized equities on the Arbitrum network for its EU customers. Tron's TRX token also had a solid month, with a gain of 4%. On the flip side, Cardano's ADA and Sui's SY were among the biggest laggards, with losses of 18% and 15% respectively. This divergence within the altcoin market highlighted the importance of picking the right projects and not just blindly following the herd. Now, let's turn our attention to the technicals. For Bitcoin, the month of June was a masterclass in technical resilience. Despite the sharp sell-off in the middle of the month, the price quickly found support and began to climb back up. By the end of the month, a bullish flag pattern had formed on the charts, suggesting that the uptrend was still intact. The golden cross, a bullish signal where the 50-day moving average crosses above the 200-day moving average, which had formed earlier in the year, remained in play. The relative strength index, RSI, was in neutral territory, suggesting that there was still room for the price to move higher. The key exponential moving averages, EMAs, also held as support, providing a solid foundation for the price. For Ethereum, the technical picture was less clear. The price was in a period of consolidation, trading in a range between $2,450 and $2,750. The mid-2600s was a key support level, and a break below this could have opened the door to a further decline to the mid-2500s or even the low 2400s. On the upside, the $2,500 to $2,550 range was a key resistance area that needed to be overcome to confirm a continuation of the uptrend. The underperformance of Ethereum relative to Bitcoin was also a cause for concern for some investors. So, what about our $100 investment challenge? If you had invested $100 at the beginning of June, here's how you would have fared. An investment in Bitcoin would have grown to $103, a modest but respectable gain. An investment in Ethereum, on the other hand, would have resulted in a small loss, with your $100 turning into $97.21. The real winners in June were those who had invested in some of the outperforming altcoins. An investment in Solana would have grown to $106.83, while an investment in Arbitrum would have yielded a similar return of $106. This just goes to show that in a market as diverse as crypto, there are always opportunities to be found, even when the broader market is in a state of flux. Now, let's zoom out and look at the bigger picture. What did the events of June 2025 tell us about the state of the crypto market? The most important takeaway was the growing influence of institutional investors. The fact that Bitcoin was able to weather such a significant geopolitical storm was in no small part due to the steady drumbeat of institutional adoption. In June alone, we saw a massive $4.5 billion in inflows into Bitcoin ETPs. This is a clear sign that the big money is starting to take Bitcoin seriously as a legitimate asset class. Another key trend that emerged in June was the rise of the Bitcoin Treasury Company. Following in the footsteps of MicroStrategy, we saw 21 new companies adopt a similar strategy of using their balance sheets to accumulate Bitcoin. These companies added a whopping 68,000 BTC to their treasuries in June, more than offsetting the 13,500 BTC that were mined during the same period. This is a powerful new source of demand for Bitcoin, and it is helping to create a more stable and resilient market. The continued weakness in the altcoin market was another major theme of June. With the exception of a few standout performers, the vast majority of altcoins continued to lose ground against Bitcoin. This is a sign that the market is becoming more discerning, and that investors are no longer willing to throw money at any project with a flashy website and a vague white paper. The projects that are building real products and services with real utility are the ones that are likely to survive and thrive in the long run. So, What were the best projections we made on this channel in June 2025? We were one of the first to highlight the growing divergence between Bitcoin and the altcoin market, and we urged our viewers to be cautious about their altcoin exposure. We also correctly identified the key support and resistance levels for Bitcoin and Ethereum, which helped our viewers to navigate the volatile price action. And our call on Arbitrum as a potential outperformer also proved to be prescient. As we look back on June 2025, it is clear that it was a pivotal month for the crypto market. It was a month that tested the resolve of investors, but it was also a month that provided a glimpse into the future of this exciting and rapidly evolving space. The growing influence of institutional investors, the rise of the Bitcoin treasury company, and the increasing discernment of the market are all signs of a maturing asset class. And while the road ahead will undoubtedly be filled with twists and turns, the events of June 2025 give us reason to be optimistic about the long-term future of crypto. That's all the time we have for today's episode. I hope you found this deep dive into the crypto market of June 2025 to be both informative and insightful. As always, I want to thank you for joining me on this journey of discovery. Don't forget to like, subscribe, and hit that notification bell so you don't miss our next episode, where we will be dissecting the events of July 2025. Until then, stay safe, stay informed, and I'll see you in the next one.